area, and this was motivating me.
I was literally on my phone at home, and they're like, oh, we have the results. We suggest that you remove your breast. And I'm like, wait, what?
When I started stumbling and I started making the mistakes, that I realized that, now that person who I have not forgiven 2 years back, now I know what he feels like.
Very important understanding of life, that you will only get opportunities if you're good. And if you're not good, don't expect opportunities.
The best example I could ever give is Abraham Lincoln, losing every election he ever had till he won the presidency.
You know, I actually have the feeling that my life hasn't started yet.
We all have two lives. The second one begins the day we realize that we only have one life.
Wow.
The battle over language returns.
ஒரே மொழி பேசுகிறோம், ஒரே எதிர்காலத்தை நோக்கி நடக்கிறோம்.
Election about identity, loyalty.
Bye bye Stalin.
Dravida model versus double engine की सरकार.
बीजेपी एनडीए की डबल इंजन सरकार बनना तय है.
The stakes are high.
From the ground, the questions that matter, the voices that shape the vote. India votes, only on News 9. This is India's #1 news network, and you're watching News 9. English news as it should be.
A very good morning. You are watching News 9. This is Morning Brief at 9. I'm Karthik Malhotra. The big story that we are bringing for you today. Trump dials up Prime Minister Modi. Leaders speak for about 40 minutes. Bilateral trade to the Strait of Hormuz. We tell you all about that call that took place on Tuesday. Also on the show, a new report by the United Nations Development Programme says war in West Asia could push 2.5 million Indians into poverty. And finally, oil prices cool on renewed hopes of peace talks between Iran and US. Asian markets respond with a thumbs up. Indian markets also expected to open in the green. Gaurang Shah will be joining us on the show later. This is Morning Brief at 9 this Wednesday morning. Here's a look at the headlines we're tracking for you. Prime Minister Narendra Modi holds telephonic talks with US President Donald Trump, focusing on bilateral cooperation and West Asia crisis. US President Donald Trump says second round of Iran negotiations could take place in Pakistan within days after the first round ended without a deal. The US Central Command confirms a naval blockade of Iranian ports is fully implemented, with forces maintaining control near the Strait of Hormuz and turning back vessels linked to Iran's trade. US President Donald Trump's pick for Federal Reserve Chair Kevin Warsh faces a key Senate hearing next week amid criticism over political influence on the central bank. US Vice President JD Vance says deep mistrust persists between Washington and Tehran, but signals optimism that a deal is still possible. Washington extends sanctions relief for Russia's Lukoil's overseas fuel stations, aiming to ease pressure on global crude prices. The Trump administration relaxes restrictions on Venezuela's central bank as Washington seeks closer ties with the oil-rich nation after regime change. Canadian Prime Minister Mark Carney vows swift action to reshape the economy amid Donald Trump's continuous threats after securing a parliamentary majority. And over 1,000 Hollywood figures oppose the proposed Paramount-Warner Brothers Discovery merger, warning it could reduce competition and deepen media consolidation. Prime Minister Narendra Modi and US President Donald Trump discussed the evolving situation in West Asia in their first phone call on Tuesday since US and Iran reached a temporary 2-week ceasefire on the 8th of April. Now, during this 40-minute conversation, the two leaders also stressed the importance of keeping the Strait of Hormuz open and secure. In an online post after the call, Prime Minister Modi said India and the US remain committed to strengthening their strategic partnership across all areas. US envoy and the ambassador to India, Sergio Gore, indicated that both sides are likely to finalize some big-ticket deals soon, particularly in the energy sector. Now, this was the third conversation, remember, between the two leaders this year and the first since the recent Iran-US peace talks in Pakistan's capital, Islamabad. Now, they had earlier spoken in the month of February on a trade deal and again in the month of March to review the situation in West Asia. The call on Tuesday ended with Trump telling Prime Minister Modi, and I quote, I just want you to know we all love you, unquote, news agency PTI reported, quoting US Ambassador to India, Sergio Gore. Well, India and Israel held talks on Tuesday amid rising tensions in the Gulf with a focus on Iran and the Strait of Hormuz. Israel's Foreign Minister Gideon Sa'ar spoke with India's External Affairs Minister Dr. S. Jaishankar to discuss the evolving situation in the region. The Israeli minister stressed that Iran's actions in the Strait of Hormuz amount to what he called economic terrorism, impacting global trade and freedom of navigation. He said there is a need for coordinated action to ensure safe passage for all countries, including India and Gulf nations. The Israeli minister also underlined the importance of a firm U.S. stance in negotiations, particularly on preventing Iran from acquiring nuclear weapons. Now, for India, the issue is especially significant given its heavy dependence on energy flows through the Strait of Hormuz. Meanwhile, US President Donald Trump has hinted at a fresh round of talks with Iran, possibly returning to Pakistan within the next 2 days. Speaking in an interview to New York Post on Tuesday, Donald Trump said discussions could resume soon, with Islamabad emerging once again as the likely venue. Now, interestingly, President Trump initially suggested talks may not return to Pakistan, but later indicated it was more likely, praising Pakistan's Army Chief Asim Munir and what he called a great job. Now, the comments come after the first round of negotiations over the weekend ended without a deal, leaving key issues unresolved.
Talks to end the war in Iran could resume this week, according to sources who spoke to Reuters on Tuesday. This comes after negotiations collapsed last weekend in Islamabad, prompting Washington to impose a blockade on Iranian ports. Signs that diplomatic engagement might continue helped calm oil markets.
They'd like to make a deal very badly, very badly.
On Monday, U.S. President Donald Trump said Iran had been in touch with him and wanted to make a deal, but added that he would not sanction any agreement that allowed Tehran to possess a nuclear weapon.
Iran will not have a nuclear weapon. And we agreed to a lot of things, but they didn't agree to that. And I think they will agree to it. I'm almost sure of it.
Since the United States and Israel began the war on February 28th, Iran effectively shut the Strait of Hormuz to nearly all vessels except its own. In a countermeasure, the U.S. military said it began blocking ship traffic in and out of Iran's ports. On Tuesday, the International Monetary Fund warned that the war in the Middle East is elevating global financial stability risks. IMF chief economist Pierre-Olivier Garantia.
So despite major trade disruptions and policy uncertainty, last year ended on an upbeat note. This momentum was expected to carry into 2026, and we were looking to lift up our global growth forecast. Now, war in the Middle East has halted this momentum.
A source involved in the U.S.-Iran talks said both countries could return to negotiations as early as the end of this week, and that a proposal had been shared with Washington and Tehran to rescind their delegations. Meanwhile, the ceasefire between the two countries has largely held over its first week, despite sharp rhetoric from both sides.
Meanwhile, U.S. Vice President JD Vance has acknowledged deep mistrust between Washington and Tehran, saying it cannot be resolved overnight. At the same time, Vance struck a cautiously optimistic note, saying Iranian negotiators do want a deal and that he feels very good about the current position. For now, a fragile 2-week ceasefire is still holding, with about a week still remaining.
I mean, look, you never know. The United States had never had meetings at that level with the Iranian government in 49 years. Like, it's a meeting that had never before happened. Not Democrat, not Republican. We had never had a meeting like that where you have, the person who's effectively running the country in Iran sitting across from the Vice President of the United States. That had never happened. And what look, honestly, after 49 years, there's a lot of course, mistrust between Iran and the United States of America. You're not going to solve that problem overnight.
Now, staying with stories relating to the Strait of Hormuz, well, a U.S.-sanctioned Chinese tanker, Ritz-Tari, has turned back at the Strait of Hormuz on Wednesday after exiting the Gulf a day before, highlighting the impact of Washington's naval blockade in the region. Now, shipping data shows the tanker reversed course shortly after crossing the Strait of Hormuz as U.S. enforcement tightened on vessels linked to Iranian ports. It was among a handful of ships moving through the strait on the first day of the blockade, but the turnaround signals growing restrictions on maritime traffic. The U.S. Central Command said on Wednesday the blockade is now fully in place, with forces maintaining what it calls maritime superiority in the region. Meanwhile, Chinese state media reported on Tuesday that President Xi Jinping has vowed to play a constructive role in promoting peace talks in West Asia after a first round of discussions between the US and Iran ended in Pakistan without agreement. Spain's Prime Minister Pedro Sanchez has thrown his weight behind China, calling it the best possible mediator to help end the US-Iran war. Now, speaking during his visit to Beijing, Sanchez said there is no better interlocutor than China to push forward diplomatic efforts, including reopening the Strait of Hormuz. Listen in.
Muy difícil encontrar otros interlocutores que puedan desanudar esta situación provocada en Irán y en el Estrecho de Hormuz, más allá de China.
Y me permito el lujo de empezar preguntándolo por las palabras de Xi Jinping, precisamente.
He tenido la oportunidad de comentar con el presidente Xi las reformas que nuestro sistema multilateral necesita para reconocer de mejor manera la realidad multipolar del mundo de hoy. También de debatir sobre la grave situación en Líbano, en Gaza, en Irán, en el Estrecho de Hormuz, sin duda.
Meanwhile, in the midst of all the action, there are signs of life slowly returning to Iran as the country's iconic Grand Bazaar reopens amid the fragile ceasefire with the United States. Now, after weeks of disruption caused by the conflict, Iran's world-famous Persian rug sellers are back in business, with traders making the most of the brief pause in hostilities. The mood on the ground remains mixed relief at opening, but concern over how long the calm will last. Take a look.
In Tehran's historic Grand Bazaar, the shops are opening again amid a fragile U.S.-Iran ceasefire. Deep in the market, repair specialist Saeed Mohammadi gets to work on one of the country's famous Persian carpets. He said workers returned to their basement store only recently, with the outlook still uncertain.
Under these wartime conditions, we had been closed for about 2 months, and only 5 or 6 days ago we returned. Now we rely on God, and we'll see what happens from here on. Will there be peace or not? We will see what the market conditions become. God willing, it will improve.
One carpet shop owner says business is slowly resuming, with some shipments to Europe moved by land. Over in a small shop on the second floor of one alley, Mohammed Ajahi works on restoring a carpet's color. He says he needs to make a living, despite the perils of war.
We come to work. Even if the war intensifies, we have no choice because of our livelihood. People must have some means of living. Life has become difficult.
Down in his basement, Mohammadi echoed Ajahi's sentiments on the precariousness of their livelihood.
The situation is difficult. We were not working and had no income. Our income comes only from work. On any day you do not work, you have no income at all. So far, we have not run into serious problems. If it does not continue, thank God things have been manageable.
But after the failure of the U.S.-Iran talks over the weekend, no one knows how long this relative calm will last. foreign media in Iran operate under guidelines set by the Ministry of Culture and Islamic Guidance, which regulates press activity and permissions.
And staying with the crisis in West Asia, Israeli and Lebanese officials held rare talks in Washington on Tuesday, even as fighting with Hezbollah continues on the ground. The meeting marks a significant diplomatic movement in the history of both countries, but expectations for a truce remain limited. Now, Israel has ruled out any discussion of a ceasefire and is instead pushing for Lebanon to disarm Hezbollah. Take a look.
U.S. Secretary of State Marco Rubio hosted rare talks between Israeli and Lebanese negotiators in Washington on Tuesday, calling the meeting a historic opportunity.
This is a process, not an event. This is more than just one day. This will take time, but we believe it is worth this endeavor, and it's a historic gathering that we hope to build on.
The meeting began as Israel struck targets in southern Lebanon. Cross-border gunfire could be heard and helicopters were seen flying overhead as Israel continued to press its war on Hezbollah. Israel has ruled out a discussion of a ceasefire and demanded that Lebanon disarm the Iran-aligned group. Israel's ambassador to the U.S., Yahel Leiter, who participated in the Washington meeting, expressed optimism about the talks.
What gives me hope is the fact that the Lebanese government made it very clear that they will no longer be occupied by Hezbollah. And Iran has been weakened. Hezbollah is dramatically weakened. This is an opportunity. This is the first time our two countries are sitting together in over 3 decades. Let's feel the moment. Let's enjoy the moment.
The meeting comes at a critical juncture in the crisis in the Middle East, a week into a fragile ceasefire between the United States, Israel, and Iran. Iran says Israel's campaign against Hezbollah in Lebanon must be included in any agreement to end the wider war, complicating talks mediated by Pakistan aimed at averting further economic fallout. Tuesday's talks in Washington were a significant step, but immediate results are unlikely, said Dorothy Schmid of the French Institute of International Relations.
I don't think the Israelis expect a very concrete result on the field from these peace talks. Clearly, the Israelis didn't want a ceasefire. They think they have to keep on fighting Hezbollah themselves because they know the Lebanese authorities are unable to disarm Hezbollah. And apparently, the Israelis accepted these talks only under very strong pressure from the United States, who don't want the ongoing Israeli military operations in Lebanon to derail the diplomatic process with Iran.
Israel and Lebanon agreed to hold direct negotiations at a mutually agreed upon time and place following Tuesday's meeting.
Well, the Iran war was expected to be a defining moment for Israeli Prime Minister Benjamin Netanyahu, a chance to secure a historic victory. But more than 6 weeks into the conflict, that outcome somehow remains elusive. Now, despite significant military action, Netanyahu has struggled to convert battlefield gains into domestic political success, with no clear endgame still in sight.
The Iran war was meant to deliver a defining victory over Tehran that would secure Israeli Prime Minister Benjamin Netanyahu's place in history. More than 6 weeks into the conflict, he has been unable to translate military might into political gain. That's according to surveys cited by Nimrod Nir, a political psychologist at the Hebrew University of Jerusalem.
The vast majority of Israelis believe that this war is a failure. Only 10% perceive it as a significant success versus 30%, over 30% that perceives it as a complete failure. Moreover, vast majority of Israelis think that Israel will be weakened after this war, and less than 40% say that if they would know in advance that this will be a position after a month and a half of war, they would support it.
Despite Israel's overwhelming firepower, its enemies across every front have been weakened but not neutralized. Even after heavy Israeli-U.S. airstrikes and the loss of senior leaders, Iran remains defiant. Tehran's nuclear stockpiles endure. Its missile capability is now proven, and it holds sway over the Strait of Hormuz, the artery for a fifth of global oil flows. Palestinian Islamist militant group Hamas has not been disarmed or dismantled in Gaza, and Iran-backed Hezbollah continues to fire rockets in northern Israel from Lebanon. However, Netanyahu is pressing ahead.
The campaign is not over yet, but we can clearly state that we have historic achievements. I want to remind you where we were. Iran tried to strangle us. Hamas in Gaza, Hezbollah in Lebanon, Assad regime in Syria, the militia in Iraq, the Houthis in Yemen, Iran itself. They wanted to strangle us, and we strangled them. They threatened us with destruction, and now they are fighting to survive. We affected them, and we have more to do.
Political analysts in the region say Netanyahu is paying a political price for a military campaign launched with U.S. President Donald Trump that has failed to deliver a decisive outcome. Netanyahu's approval ratings have slipped, and with legislative elections due by late October, the political risks he faces are rising.
70% of the Israeli public does not believe that the public receives a full and real picture of the situation in Iran. Less than 15% believe Netanyahu when he says that Iran is weaker than ever, and there's a complete distrust, even among who are government loyalists in whatever the political and security echelon are conveying. And we haven't seen such figures since October 7th.
Netanyahu's office did not respond to a Reuters request for comment. The prime minister has criticized those who he said were diminishing Israel's achievements in Iran, saying Israel has emerged stronger and Iran weaker.
Well, the global economic outlook is taking a hit as the war in West Asia begins to ripple through markets. The International Monetary Fund has cut its global growth forecast for the year 2026, warning the world economy could be thrown off course. Now, in the latest World Economic Outlook, the IMF now expects growth at 3.1%, down from its earlier estimate of 3.3%. The downgrade comes after the conflict between the US and Iran disrupted commodity markets and pushed prices higher. Listen in.
Our report presents three scenarios. Our reference forecast assumes a short-lived conflict and a moderate 19% rise in energy prices in 2026. Still, some damage will not be avoided. Global growth falls to 3.1% this year, a downgrade from January forecast, and headline inflation rises to 4.4%. Our adverse scenario assumes further disruption, leading to higher energy prices and inflation expectations and tighter financial conditions throughout the year. Growth falls to 2.5% this year, and inflation rises to 5.4%. Our severe scenario assumes that energy supply disruptions extend into next year, with greater macro instability. Global growth falls to 2% this year and next, while inflation exceeds 6%.
The top global institutions are warning of an unprecedented shock to the energy market as the West Asia conflict continues to disrupt supply. The IMF, the World Bank and the International Energy Agency have jointly urged countries to avoid hoarding energy supplies or imposing export restrictions. Now, they warn that such moves could deepen the crisis and further destabilize already volatile global markets.
Global financial and energy leaders are urging governments not to worsen disruptions in the global market. On Monday, the International Monetary Fund, World Bank, and International Energy Agency warned against hoarding supplies or imposing export controls. They said those moves could worsen what they called the biggest shock ever to hit the sector. After a joint meeting, IMF Managing Director Kristalina Georgieva appealed for restraint as many regions struggle with supply shortages.
Do no harm. The first principle should be don't impose export restrictions that are only making the disequilibrium worse.
Georgieva said she has been speaking with countries across Asia, Sub-Saharan Africa, and the South Pacific, where fears over energy access are growing. IEA Chief Fatih Birol said some countries are not using emergency stock releases as intended.
These stocks we release is for the markets, for the countries to make use of their energy use. But some countries are unfortunately adding these stocks to their existing stocks, and at the same time setting some export restrictions. And this is definitely not comforting the markets.
The pleas come as the U.S. military has begun blocking ships leaving Iran's ports. Meanwhile, Tehran has threatened retaliation after talks to end the war broke down over the weekend. Oil prices jumped back over $100 per barrel after that, though they have since eased lower again on hopes for renewed dialogue. Since the conflict began on February 28th, crude prices are up around 50%, with gas and fertilizer prices also rising, fueling concerns about food security and job losses. The IMF and World Bank now expect slower global growth and higher inflation as a result of the war. Birol said the IEA had already released about 400 million barrels of oil from its reserves and is prepared to take further action if needed.
From macroeconomy now to Wall Street, which ended Tuesday's session on a strong note with optimism driving markets even higher. The S&P 500 is now inching closer to a record closing high as investors bet on a possible resolution to the West Asia conflict. At the same time, strong bank earnings have added to the positive sentiment, offering reassurance about the health of the American financial sector.
Wall Street's main indexes rallied on Tuesday, with the Dow gaining 0.2%, the S&P 500 adding more than 1%, and the Nasdaq climbing nearly 2%. President Donald Trump told the New York Post that talks to end the Iran war could resume over the next 2 days, boosting investor optimism. Meanwhile, inflation data showed U.S. producer prices, while still elevated, increased less than expected in March. Brian Krauez, president of Scharf Investments, explains.
You've got PPI running 4% annually. Obviously, that's well above the Fed's 2% target, but it was supposed to come in at 4.6. And if you look under the hood, core PPI on a monthly basis, taking out food and energy, was actually only at 0.1%. So the story for the market is easing inflation pressures, easing geopolitical risks, and then you're getting a strong risk rally with oil coming off and stocks going up.
Big banks reported more earnings on Tuesday, with Citigroup beating first-quarter profit estimates, sending its shares up more than 2.5% to their highest level in nearly 2 decades. JP Morgan Chase posted a bigger-than-expected jump in first-quarter profit, but CEO Jamie Dimon warned of mounting global economic risks. Shares ended lower. And shares of Wells Fargo fell more than 5.5% after the bank reported first-quarter interest income and revenue that fell short of Wall Street expectations. Meanwhile, shares of United Airlines and American Airlines, both bumpy of late, climbed 2% and 8% respectively, after Reuters reported that United CEO Scott Kirby had pitched a potential merger with American Airlines to President Trump earlier this year, raising the prospect of a deal that could reshape the industry.
All right, so that was the update on Wall Street. From there, let's now take a look at Asian markets, which have all seemingly opened in the green this morning in massive gains seen in South Korea's Kospi. That index is up more than 3% in trade this morning. Taiwan's TAIEX also not far behind, a little under 2, in fact 1.75% higher than yesterday's close. Meanwhile, Japan's Nikkei 225 is up about 0.5 percentage point. Shanghai Composite Index also up about 0.4%, and Hong Kong's Hang Seng up almost 0.8% or so. Meanwhile, Indian markets also reacting really favorably, especially after that midweek holiday yesterday, with the Sensex now climbing more than 1,200 points. In fact, almost 1,250 points. That's 1.6% up, with a last trading price of 78,000 at 9:25 a.m. this morning. Nifty 50 also up more than 1.5%, right now trading at levels of about 24,214. As you can see, the mid-cap and the small-cap index performing much better than the benchmark Sensex and Nifty in percentage terms. And volatility in the Indian market is also slightly lower this morning, below that level of 20. In fact, right now at about 18.31. Let's pull up the Nifty 50 heat map and try and see which are the sectors which are adding to momentum this morning. And it seems the IT sector is really in a good sort of buying spirit this morning, with TCS up about 3%, Infosys up about 3.4%, HCL Tech also up almost 3% or so. Meanwhile, energy major Reliance Industries is up about 1.75%, and the banking side also looking strong, with HDFC Bank and SBI both up more than 1.5% or so. Let's put the market mood in perspective with Gaurang Shah, Senior Vice President, Geojit Financial Services, who joins us this morning. Good morning, Gaurang. A lot of news triggers for the markets to digest, especially given that yesterday was a holiday. This morning opening to good news about a telephonic conversation between the US President Donald Trump and Indian Prime Minister Narendra Modi, the potential of bilateral trade talks resuming, and then in addition to that, of course, the cooling prices of Brent oil, all adding to momentum and the hope that the conflict in West Asia may be ebbing out.
Thank you, Karthik, for having me on the show. Good morning to all your viewers and to you. So first of all, let Trump sort out the mess that he has created about 7 weeks back, unnecessary bloodshed and the destruction, and the outcome is we all know about it. So, I mean, and we all know, Karthik, we've discussed about this FTA with US, that India is absolutely in no hurry. It's been more than a year. 2nd of April last year is the date when he announced tariff. A lot of countries rushed to US and to President Trump to sign the free trade agreement. And then we all know the history after that. And more importantly, Karthik, I think he's got a royal mess to take care in US. First of all, the rising inflation. Second one is the ruling by the Supreme Court in US against the tariff that is implemented. I was reading a report about a week or 10 days back, which said that due to this ruling by Supreme Court in US and the tariff that has been collected illegally, supposedly, by Trump administration, comes to somewhere around $130 billion. Add to it, if there is any additional claim put in place, then that figure from 130 billion could go up to $180 billion. Where on earth are you going to pay that kind of money?
Absolutely.
And that is still unclear. So, I mean, why rush? So India is absolutely in no hurry, and I absolutely salute the government, Prime Minister and his entire team for not rushing into it. Otherwise, I don't know what would have happened. So let's wait and watch. Let him clear the mess in his country and the mess that is created in West Asia in form of the geopolitical situation. As far as the markets are concerned, I think we should breathe a sign of relief. And honestly, all of us want a logical end to this unnecessary bloodshed and destruction that has happened. And if that is in place, then I think we'll have crude oil prices cooling off. But it won't cool off to a great level, geopolitical level of $60-65, Karthik, because infrastructure has got damaged. And again, rebuilding that infrastructure is going to take quite a while. Right. So we will have to deal with elevated crude oil prices. And I think what the government and ministers have mentioned, including Mr. Hardeep Puri, that India has been negotiating with 40 plus countries to secure its energy requirement. And I think if there is a peaceful resolution between Russia and Ukraine, then there will be optimism in terms of Russian crude oil and natural gas coming into India at a discounted price.
All right. We are also in the earnings season, Gaurang, and Q4 earnings. In fact, some of the big Nifty 50 companies, including TCS, have announced. Wipro is set to announce their results tomorrow. But overall, the fact that we are in Q4 earnings season, the fact that this war took place while we were still in Q4 and you had 1 month of March in between, and that is likely to sort of have an impact on the numbers as well, on the earnings. And then, of course, the latest inflation print that we've seen, CPI inflation at about 3.4%. Some estimates suggesting that coming months could see even higher inflation. Overall, the Q4 earnings season plus this first quarter that we are in with potential elevated prices, and then of course also IMD suggesting not the best piece of news that we could see a below normal rainfall this year. Overall, how do you see maybe the next 2 quarters or so panning out as far as investors on the Lal Street are concerned?
If I have to put one word in place, then that would be challenging, Karthik. not only for the earnings season and for the economy, but also for the stock market. March month, 1 month, Karthik, will not have a huge impact on earnings because normally sectors have a long-term contract in terms of crude oil input derivatives, as we call it, dependency. If the so-called resolution, and I seriously, all of us hope that common sense and wisdom and fine sense of judgment prevails upon Donald Trump of all the people in the world to put this to an end. So that impact will be there. And we also heard the Honorable RBI Governor during the credit policy that it is a clear and present danger, this geopolitical situation, and 80% reliance on crude oil imports. Any country like ours would have that kind of problem. And of course, dependency on Strait of Hormuz, 60, 65, 70% odd, not only for natural gas and crude oil, but also for other raw material inputs. So we will have a little bit of challenging time. My sense is that fourth quarter will not have much of negativity of whatever has happened in terms of geopolitical situation. But yes, the current financial year, the new financial year, first quarter, that could witness a little bit of pain. Then it depends upon how corporates manage their input cost and operational efficiency to reduce the negative impact, Karthik.
All right. And for investors, fresh or existing investors sitting right now on the 15th of April wanting to invest into the market, are there any sectors which are sort of proofing themselves against what is happening in West Asia and the direct or the indirect impact? Are there any sectors which would totally remain isolated from all the chaos that we are seeing in the world?
None at all, Karthik. Let me be very honest. I don't want to beat around the bush. No sectors will be left untouched. Karthik.
Are there, let me rephrase it, are there sectors which are better off than other sectors at this moment?
So I will again rephrase that. Relatively less impact, negative impact, Karthik, if you will. So you have power generation sector, you have telecom service, basically services oriented, Karthik, is something that I believe will be relatively less impacted. So you have power generation, you have telecom service providers, you have healthcare services like hospitals. They do really well in terms of isolating themselves from the current noise that is going around, and a firm conviction in the entire BFSI segment. So I think, and of course defense, Karthik, though they are into manufacturing, but yeah, defense is relatively insulated.
So these are some of the sectors: healthcare, communications, defense, banking and financials, relatively, to use your phrase, relatively better off. Let's leave it at that this morning, Gaurangsha. Thank you so much. As always, pleasure having you here with us on News 9.
Always a pleasure. Thank you, Karthik. Thank you.
And with that, we will slip into a very short break. A lot more coming up on the other side. Stay with News 9.
Others see a teenage tantrum. I see you standing your ground. I see you, my daughter, 16 and already owning your story. And I couldn't be more proud. For you, only natural diamonds.
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया.
Amid a fragile ceasefire, stakeholders take on the tough questions.
Was Israel surprised by the asymmetric warfare which Iran started conducting?
Yes, I think it was a kind of surprise, the level of savagery.
Why has Iran stopped the traffic in the Strait of Hormuz?
So we have to defend ourselves.
Like never before, on point with Kartikeya Sharma, decoding Hormuz, Kharg and the ceasefire.
What is the future of peace in West Asia?
I hope that they got their lesson.
That are supposed to give a chance. We stay ready in case it doesn't work.
Every war has a political objective.
The voices that matter, only on News 9.
Ahead of 2026 West Bengal Assembly election, polarization in West Bengal sharpens.
टीएमसी सरकार के जाने का काउंटडाउन शुरू हो चुका है.
हम डिटेक्ट, डिलीट और डिपोर्ट ये पॉलिसी के तहत एक घुसपैठियों को बंगाल के बाहर निकालने का काम करेंगे।
There are three prime issues: citizenship, border, identity. Is it the Nirmam Sarkar versus May J Babu?
যতই করো হামলা জিতবে কিন্তু বাংলা।
Who will retain the throne in West Bengal? Can West Bengal look beyond the muddy water of violent politics?
From the ground, the questions that matter, the voices that shape the vote. India votes only on News 9.
Welcome back. You are watching News 9. This is Morning Brief at 9. Well, global oil prices are experiencing volatility of the kind they've not seen in recent times. In the midst of it all, however, India's robust macroeconomic and financial sector fundamentals are likely to cushion the impact of even a sustained global oil price shock. Now, economic growth could slow down, however, by up to 80 basis points if crude averages at $130 per barrel through the year 2026, and this is according to data from S&P Global Research. Now, if the oil stress continues, corporate earnings in India before interest, tax, depreciation and amortization, popularly known as EBITDA or operating margins, could decline by 15 to 25% in this financial year, that's FY27. The banking sector asset quality may weaken, pushing bad loans to around 3.5%. Indian banks seem to be well positioned to absorb the looming oil shock, supported by strong capital buffers and low non-performing assets, though credit costs may rise modestly and profitability could also come under pressure this financial year. Now, S&P Global Ratings assumes Brent crude at $130 per barrel in 2026 and $100 a barrel in the year 2027 under the global oil stress case. Now, it does not expect any immediate impact on India's sovereign ratings, though fiscal consolidation efforts could face temporary setbacks. However, global oil prices, which are higher now, could widen the current account deficit, with estimates suggesting that a $10 per barrel increase in prices of oil may expand the gap by about 0.4 percentage points for India's GDP. Now, for a projected GDP of 6.8% for this financial year, the slump would still keep India's growth rate above the 6% mark. And remember, we are talking about a bad case scenario with Brent at $130 per barrel for this year. Now, the rupee could also face depreciation pressures amid risk of sentiment and a rising import bill. Now, S&P Global also warned that if the government stepped in with subsidies, an energy shock would in turn get transmitted through higher input costs, squeezed corporate margins, rising consumer prices and increased fiscal. Now, growth could also be hit by potential supply disruptions affecting fuel and petrochemicals. Now, despite these risks, India's economy entered 2026 with strong growth momentum, resilient domestic demand and low inflation, which should help absorb near-term shocks. Overall, S&P Global Ratings said India can weather a few months of elevated oil prices and supply disruptions, though a prolonged shock would pose broader risks to growth, fiscal stability and external balances. It said India is equipped to handle some strain. Robust corporate balance sheets provide cushion against higher energy prices. Banks, meanwhile, have strong capital and profitability. And in other news, which is impacting not just the Indian economy, but also oil marketing companies, well, India's fuel economy is facing a silent squeeze, even as global crude prices surge amid the Middle East or the West Asian crisis and supply disruptions around the Strait of Hormuz. Petrol and diesel prices at petrol pumps in India have largely remained unchanged. That some analysts now point to state elections being the reason behind it. Now, the decision of not increasing pump prices is now creating a massive financial burden for India's state-run oil marketing companies. While crude prices swing near the $100 per barrel mark, companies selling fuel domestically are unable to pass on those rising costs to end consumers, and the result is mounting losses. According to estimates, oil companies are currently losing around 18 rupees per litre on petrol and losing 35 rupees per litre on diesel. These are the losses being borne primarily by India's three major public sector oil marketing companies, Indian Oil Corporation, Bharat Petroleum, as well as Hindustan Petroleum Corporation Limited. Now, what makes the situation even more striking is that retail fuel prices have not been revised since the month of April of 2022, even though global crude prices have fluctuated sharply during this period. Now, crude prices themselves have been highly volatile, and look at the graph on the screen. They moved from above $100 per barrel, dropped to around $70 earlier this year, and then surged again to touch about $120 per barrel last month during the West Asia war. Now, that volatility has pushed the sector into deep financial strain. At the peak of the crisis, the three oil companies were losing nearly 2,400 crore rupees every single day. Those losses have since eased somewhat, dropping to about 1,600 crore rupees per day. But that reduction didn't come from higher fuel prices. Instead, it followed a government move to cut excise duty on petrol and diesel by about 10 rupees per litre, with the relief used to offset company losses rather than pass them on to consumers. Even so, the pressure remains intense. Now, losses recorded in the month of March have already wiped out gains made earlier in the months of Jan and Feb this year. And oil companies are now expected to report losses for the Jan to March quarter. Now, India's heavy dependence on imported crude makes the situation even more sensitive. The country imported about 88% of its crude oil needs in 2025, leaving it highly vulnerable to global price shocks. Meanwhile, fuel taxation remains a major factor in the pricing structure. Central taxes currently stand at almost 12 rupees per litre on petrol and a little under 8 rupees per litre on diesel. But even removing these taxes entirely would not fully cover the losses oil companies are facing. And cutting them further could come at a steep cost for government finances. In fact, a complete rollback of excise duties could lead to a $36 billion revenue loss for the government and widen India's fiscal deficit. Higher crude prices could also push India's current account deficit to around $20 billion in the first quarter of 2026, with every $10 increase in crude worsening the deficit even further. And with crude prices still volatile and elections around the corner, analysts warn that higher petrol pump prices may eventually be unavoidable. And the battle in West Asia will send economic shockwaves across Indian homes. A new assessment by the United Nations Development Programme, or UNDP, warns that the ongoing military escalation in West Asia could push as many as 2.5 million Indians into poverty. The report says the conflict is triggering a chain reaction across the global economy, driving up energy prices, disrupting trade, and putting pressure on household incomes across Asia and the Pacific. Now, India particularly is vulnerable for several reasons. First, the country imports more than 80% of its crude oil, and tensions in the region have already pushed global oil prices higher. Now, higher fuel costs eventually filter into the broader economy, making transport, electricity, and essential goods more expensive. Second, West Asia is deeply linked to India's economic lifeline. Now, more than 9 million Indians live and work in Gulf countries, sending billions of dollars back home every year as remittances. Now, if economic activity slows in the region because of the war, those remittances could fall, affecting millions of households in India. The UNDP report also warns that these pressures could reduce household purchasing power, increase food insecurity, strain government budgets, and weaken livelihoods across the region. But India is not isolated. Globally, the crisis could push about 8.8 million more people into poverty, with developing countries expected to bear the brunt of the economic shock. The impact may go beyond poverty numbers. The UN says conflict could also set back human development progress across the Asia-Pacific, affecting education, healthcare, and social welfare indicators. And in further likely bad news for India's economy, IMD has predicted below normal southwest monsoon in the June to September period amid growing risk of El Nino, which is linked to depressed summer rainfall in India. IMD forecast gives a 31% probability of below normal rains and a 35% chance of deficient rainfall, a clear indication of significantly less than normal monsoon this year. Now, the forecast that is likely to firm up by the month of May, in fact by end May, could mean bad news for India's farm sector, especially in the central and western parts of the country that depend on the southwest monsoon for most farming operations. Irrigation, drinking water availability, reservoir capacity and hydropower potential all get impacted, and the effect could spiral into more challenging times with elevated prices of fertilizers and commercial diesel anyway adding to input cost woes given the conflict in West Asia. Now, depressed rainfall not only impacts the summer sown kharif crop but also the winter rabi crop that is dependent on high moisture content in the soil. And moving on now to factories in India. Now, this week, two images from India's industrial heartland are colliding together. They tell a story that is both urgent as well as at some level unsettling. On one hand, workers in Noida were on the streets protesting for higher wages, a demand rooted in rising costs, inflation and the basic promise of economic dignity. On the other hand, a viral video shows factory workers wearing head-mounted cameras, not for safety, but to train artificial intelligence systems that could one day end up replacing them. Now, in a moment that forces a difficult question, should India embrace automation at the cost of human jobs or double down on protecting its workforce? Well, the reality seems somewhere in the middle. India's manufacturing sector is under pressure. Global competition is intense. Margins are tight. Companies are being pushed to produce faster, cheaper and with greater precision. In that world, automation isn't just attractive, it's inevitable. Now, robots don't strike, they don't demand higher wages, they don't make human errors after a 12-hour shift. And yes, they can work 24/7. Countries like China, South Korea and Germany have already leaned heavily into automation, boosting productivity and global competitiveness. Now, if India wants to become a true manufacturing powerhouse, ignoring this shift could mean falling behind. But here's the other side. India is not Germany, India is not South Korea, and India is definitely not China. India is a country where millions depend on shop floor jobs for income and for survival. Manufacturing is not just an economic engine, it is also a social stabilizer. Replacing workers with machines at scale may improve efficiency, but it also risks widening inequality, increasing unemployment and fueling social unrest. Now, the Noida protests are not an isolated incident. They are an early warning. And then comes another deeper irony. Those workers wearing cameras on their heads, they are not just doing a job. They are, in fact, training the very systems that will take their jobs and make them redundant. It raises a moral question as much as an economic question. Should workers be participants in building a future that excludes them? And can they say no? The answer is not binary. India does not need to choose between humans and robots. It needs to redesign the relationship between the two. The socialist side says automation should augment and not abruptly replace human labor. Workers must be reskilled, not sidelined. But their economics of training and keeping larger workforces in play may not last forever. At the same time, companies must recognize that long-term sustainability comes not just from efficiency, but from social stability. Noida workers have got a 21% wage hike, but the chapter is not closed. Rather, a new story begins where factories may choose to invest in machines that don't need salary hikes, but only software upgrades. And moving on now to some global stories, e-commerce giant Amazon is making a big move in the space race. The US-based company announced it will acquire Global Star in a deal worth over $11.5 billion as it looks to strengthen its satellite internet ambitions. The acquisition is aimed at boosting Amazon's capabilities in low Earth orbit connectivity, a space currently dominated by Elon Musk's Starlink.
We have ignition.
Amazon on Tuesday said it would acquire satellite company Globalstar for about $11.5 billion as the online behemoth looks to compete with Elon Musk's rival satellite firm, Starlink. The announcement sent shares of both companies skyward, with Amazon gaining 3.5% and Globalstar soaring 11%. Amazon has been working to ramp up its satellite network by deploying about 3,200 satellites in Earth's low orbit by 2029, roughly half of which should be in place by July due to a regulatory deadline. The online giant is also preparing to roll out its satellite internet services later this year. Tech companies are pouring in billions of dollars to capture the lucrative market for satellite-based connectivity. But it will be a tall order to match Starlink's 10,000-unit-strong network. Through the deal, Amazon adds Globalstar's 24 satellites to its existing network of more than 200. Globalstar's satellite network is designed for reliable, low-data connections directly to mobile devices, or what is otherwise known as direct-to-device or D2D. The technology removes the need for devices to connect to ground-based cell towers, making them crucial in powering emergency services and delivering connectivity in areas with limited cellular coverage. The company said the deal will help Amazon deploy D2D beginning in 2028. Meanwhile, Starlink already serves more than 9 million users globally. The SpaceX unit, which provides high-speed broadband through user terminals, is also developing D2D services through partnerships with telecom operators such as T-Mobile. Amazon's move comes closely on the heels of SpaceX moving forward with its plan for a stock market listing. Starlink contributes roughly 50 to 80% of revenue generated by SpaceX.
And finally, a major media deal in the United States is facing growing backlash from within the industry. More than 1,000 filmmakers, actors and entertainment professionals have signed an open letter opposing a proposed $110 billion takeover involving Warner Brothers Discovery and Paramount Skydance. They argue that fewer major players could limit creative diversity and reduce opportunities for independent voices. We leave you with that report.
Over 1,000 filmmakers, actors and industry professionals have signed an open letter opposing Paramount Skydance's proposed acquisition of Warner Brothers Discovery. The letter, released on Monday, stated that the move would further consolidate an already concentrated media landscape, reducing competition. It said the tie-up would result in fewer opportunities for creators, fewer jobs across the production ecosystem, higher costs, and less choice for audiences. Among the signatories were actors Jane Fonda, Joaquin Phoenix, Mark Ruffalo, Ben Stiller, and Kristen Stewart. The proposed $110 billion takeover would bring together two of Hollywood's largest studios and content libraries. It would also unite streaming platforms Paramount Plus and HBO Max. Regulators in the US and Europe are expected to scrutinize the deal, weighing its impact on consumers and the creative community. Paramount and Warner Brothers did not immediately respond to requests for comment.
This is India's #1 news network, and you're watching News 9, English news as it should be.
पढ़ता है खेलता है झूलता उछलता है दौड़ता कभी कभी दौड़ कराता है आगे आगे बढ़ता है इंडिया अमूल दूध पीता है इंडिया
Amid a fragile ceasefire, stakeholders take on the tough questions.
Was Israel surprised by the asymmetric warfare which Iran